Crypto is or can be a new kind of money, changing the financial industry, changing the way that we transact, and kind of how we define the bottom line of our economic traffic. The second view that we want to take is a much broader one, where we're saying that tokens are a new value model, which means that we can change the digital economy, the way the internet works, the way that we define what is valuable, who can have value, and how we can kind of distribute that. And to talk about that today, I brought Jana along with me, also because she's involved in a very interesting project in microfinancing and token economics. So we'll hear a little bit more about that as well. So first of all, to start, yeah, you already said you enjoyed the event. How were your first days in London? Anything interesting that came up?
Honestly, I'm very jet-lagged because 2 days ago I landed from South America, where I spent 3 weeks exploring the blockchain cryptocurrency space over there. I would recommend everyone to look into that regions because there is a real urgency for cryptocurrencies. So this is the difference between Europe, where you have sort of only traders because people don't need cryptocurrencies in order to survive. But over there, like in countries such as Venezuela, people are literally using Bitcoin, Bitcoin Cash or Dash, which is pretty interesting to see. So, and apart from that, yesterday, obviously, I went to some bar and I had wine, and then I paid £5 for the wine. And what caught my interest, on the banknote it says, I promise to pay the bearer on demand the sum of £5. And this is what made me intrigued, because what does it mean? Does it mean that the paper has a value, or because I don't think the paper, which we consider to be a banknote, has a value of £5. So I really wonder where does the value of £5 go, or
yeah.
Can you explain more?
Yeah, and also I think how that kind of relates to how we think about tokens. I think one of the things people generally skip over or don't realize is that whatever we use as money today it's already a representation of value, right? That piece of paper indeed doesn't have an intrinsic value of £5 or 10, 20 or even 100. Back in the days when we started to create money, and I think this was in the 15th or 16th century when paper money was coming up. But even before that, when we had gold coins, maybe they had an intrinsic value. Then we had copper coins, which was already representing some value, but it was still rare and had some value. Then I think the Chinese started with paper money, and everyone laughed at them, how can that work? And it worked because we created all kinds of rules around it. And after that, we actually already digitized money. I think I heard yesterday from someone that here in the UK, only 4% of transactions are made with cash, and the rest is already digital. So we already kind of have a digital currency that means that we're exchanging something that only represents a value. So I think it's good to already state that money as we know it is already an abstraction. If we then think about tokens, and about that exchange, right? A wine for a few pounds. We can say, hey, can we use tokens to make that money side of the equation more efficient or more fair? And I think that's one of the things we're going to talk about with Jana. But what about can we use also tokens to change the way that we exchange that wine? Can we take money maybe out of the equation, or how can we think about that value? Because the value is in the wine, right? You want that, you are thirsty, you want to have a good time. And that's kind of related to the second view. I think we should hear a little bit about the project that you are doing and how you're using token economics on that financial side of things to, let's say, solve a problem.
So my views on token economic models is I believe that cryptocurrency can become a better money because, as mentioned, I was exploring emerging markets, and it's for those people, it's the access to financial services is non-existent. They cannot enjoy they don't even have a bank account. Many of them, there are 1.7 billion people in the world who are unbanked. And they're unbanked because for the banks it's just so expensive to bank them, to provide them with a bank account, because they don't have enough funds to provide enough, to pay the bank back in the fees. So this is a huge problem. And with cryptocurrencies, the project I'm involved with is a microfinancing project. And basically what we are doing, we are providing microloans for farmers in Mexico. And the way it works is a blockchain-based platform where anyone from the Western world can become investor or lender, as you wish. And we managed to mitigate the interest rate for the farmers from 80% to 25%. And why this is the case? Because when you consider microfinancing in emerging markets, it's very expensive with high interest rates because you operate local money at first place, there is a lot of administration, there is a lot of audit involved, and you have to pay those people who are doing the administration and the audit, right? And average loan is like $1,000. So it's very difficult to deliver the money to Mexico, for instance, because the fees when you are sending $1,000 just get too high. So therefore, cryptocurrencies with low transaction fees and with being accessible worldwide might be the best solution for those people.
All right. So, of course, I know a little bit about the project, but if I understand it correctly, what you're doing there is you're combining a group of local producers that have some value to create, whether it's food or other produce, but who don't have access to traditional financial services, and you kind of get them in touch with people who have some money to invest, but don't get enough return on investment if they would just put that in a savings account over here. So, of course, there's value in bringing those groups together, but tell us a little bit more about how you're using also tokenization there to solve several problems. You already mentioned the transaction fees, but what other ways are you using a token on that platform to kind of make that work?
Basically, token in our case is only a second layer to create incentives. It's very important to say that the loan is not performed with some ERC20 token. It wouldn't make any sense to create money out of thin air and to turn it into loan formally, right? So the loan is either in Ethereum or Bitcoin, and the token layer I'm talking about, which creates incentives, is a layer which makes borrowers to pay better. So this is the way how we can mitigate the default risk, and it incentivizes lenders to invest more over time. Because when you have some money in your savings bank account and you want to lend those money to some Mexican farmer, I mean, you can lend your money like once a month, let's say 1,000 pounds. But the thing is that the total addressable market as it comes to borrowers in emerging markets is just huge. We don't know how many people are there who are interested in loans. But the point is that we struggle with lenders a bit. Because imagine like if I were to approach you saying, look, here is like this platform, take your money from a savings bank account and lend them to someone. So there is like social impact. And also other thing is that in your savings bank account you get maybe 0.5% per year as a reward, where bank says, okay, thanks for having your money with us, and they lend your money further, and this is how they make profit, right? So I cut it off, but back to topic. If I were to approach you saying that, okay, take your money from the savings bank account and invest here in the platform, and you get a 15% return on investment, you might not believe me, because this just sounds too good to be true, right? But it might be true, because as I mentioned, high interest rates in emerging economies and loans, it's a reality, it's daily reality of many people.
Okay, so you're already saying you're using the technology and tokenization to reduce transaction fees, as well as creating an incentive model. Instead of doing a rating afterwards, you're trying to influence behavior up front to be in line kind of with the platform. Now I know, because we spoke obviously before, is that you also thought about cultural aspects in this. You're starting with a community in Mexico, but obviously thinking about expanding. How does culture play into the way you're using incentives and tokens?
Thanks for touching this point. I mean, this is very interesting. I'm not sure how many of you are familiar in the peer-to-peer lending, microfinancing. The credit risk assessment is a big thing. And when we are talking about unbanked markets, banks, when I speak to some bankers, and I tell them that, look, we are going to microfinance unbanked people, they just laugh at me. Because then we have a discussion around how do we do credit score. And I tell them, you know, we might be using Airbnb approach. So over time, you know, we open up to any borrower in the world, we set the limits for them. And over time, when they accumulate enough score, then we don't care much if they exit scam. So pretty similar system as you have with Airbnb. Also Airbnb, when they started, they had few scandals, like in the US, someone organized a big party in some house. But it didn't affect the reputation of the platform itself. So this is one thing we are thinking of. But currently we are using communities, because in Mexico, like due to proximity of the farmers, it works pretty well. So they are unbanked, and they are clustered into communities by 20 people, and there is one person who is sort of liable in case something goes wrong. What was interesting, and this relates to the culture, is that we wouldn't be able to do this in Kenya, for instance. Because in Kenya, people were slaughtering each other not such a long time ago. So over there, we have to use completely different approach when speaking about unbanked people and microfinancing. So there is no platform which would be completely universal and scalable and which would provide loans to all the unbanked people in the world, because we have to have also the knowledge of the culture, and the credit score is a big thing, and it's still a lot of discussion. There is no like one structure, how do you do the credit score in unbanked environments.
All right. So thanks for talking a bit about the project and how you're basically trying to redistribute value from let's say our side of the world, where we're pretty lucky and spoiled, towards farmers who can really need some extra financing. So I also want to look a little bit at the other side of what we said. So this is like the money side, but the value side, which is how can we use token economics to kind of change the way that we think about value and what's valuable. And I think also in, let's say, the developed world, using tokens, tokenization and blockchain technology is actually a very logical step from where we are now, especially if you look at how the internet came up and how we're using it. In principle, the internet is open and accessible for everyone, but at the same time, we've seen through the e-commerce and the existence of very large platforms is that not just power is concentrating, but also data is concentrating, and we all know that data is also value. So to me, it makes a lot of sense looking at platforms that like Amazon and Alibaba or Uber and Airbnb that have a huge concentration of what they know about people and what they're able to collect and potentially profit upon, that we start thinking about different models there as well, especially because we've seen in the recent years that there was some problems, there have been hacks, there have been data that's sold, so we need to fix it as well. Yeah. Like
many people perceive Uber or Airbnb as like the next step towards sharing economy. But when we think of it on a bigger scale, it's not sharing economy what they are doing, because Uber charging a commission of 25%, this is not like very much into sharing. And I heard different expression for Uber-like platforms, and it's like sort of aggregated economy. Mm-hmm. And I think it describes it very well.
Yeah. What I also think is, a good example to explain what I mean here is having a look at Facebook. If you look at Facebook from an input of value and output of value perspective, obviously they had to build the platform, otherwise it wouldn't be there. But the majority of the value that's inside Facebook is actually created by the users every single day, because they post there what they're doing. They're taking photos. They make that platform attractive for our advertisers. But the only one who's taking value out of Facebook is Facebook, by reselling data to, for example, Cambridge Analytics, or selling that space towards advisors. So I mean, that's obviously not the only value that's created, but it is skewed, right? The average person who's co-creating to the value of Facebook is not getting that much value out of it. And I think that there are a lot of situations where it can be very relevant to rethink that. And I would like to quote also a famous economist named De Soto, who said that value is basically everywhere. But the problem is, as soon as we don't register value or we don't acknowledge value, it kind of becomes useless because it becomes invisible. And if it's invisible, it becomes untradeable. And I think that's relevant in a lot of cases where people have value, but because they cannot register it on a bank account, or because it's not acknowledged by the major corporations or governments as a means of exchange, that value is locked up for them, and they cannot participate in the economy with it and make more money out of it.
I would say that there are a lot of assets in the world which have no liquidity, and therefore we don't recognize them as assets. Because like the reward for like when you trade something like really small and it costs like maybe 5 cents or something, obviously all the fees around the trading, they get way higher than what the value of the asset is, right? But with cryptocurrency-based platforms, we can mitigate the fees because we don't have to use banking systems. And therefore, solutions for what Berit just described might be possible.
Yeah. And I mean, also looking back at, and I'm curious what kind of talks you also heard over the past 2 days. But what to me is really interesting, except for, you know, just having the means of exchange in a money way, is thinking about, indeed, how can we create liquidity in markets? So I've heard about examples of being able to share your bandwidth and computing power that you have on your computer and being rewarded for it. And I guess the same is valid for whatever skill, knowledge, or physical asset that you have. If it becomes more easy for you to contribute that, then we can have a much more inclusive economy. And I think that goes beyond just finance. I think that's in the music industry. We already see it in gaming as well. There's some interesting platforms coming up there. And yeah, my expectation is that will go beyond those industries. Do you have an interesting example from the past days or maybe before that you've seen that's kind of transforming the way that we can exchange this type of assets?
Yesterday I saw an interesting talk about creating incentives around, you know, on the coastlines there is a lot of trash. And there are some people who are collecting it, like from NGOs. But overall, like the amount of trash is just too huge. So there is some initiative who was able to create incentives with cryptocurrencies. I mean, and they operate, I think, in the Philippines. So basically people get rewarded by picking up some small things from the coastline or from the beaches. So really, I mean, some people might perceive this, that okay, they created money out of thin air because they issued some cryptocurrency and they are now rewarding people because they are doing something. But as a result, then when the cryptocurrency has a liquidity, so it's tradable on the markets, then the more people are being rewarded and the more velocity the cryptocurrency has, there is a lot of potential for the increase of the value of the cryptocurrency in the markets because people are actually using it and there is a traction, there is a velocity. So I really like the example. I mean,
yeah, I agree that it opens up possibilities where they weren't there any before, and I think a great example that I know as well has to do with data analytics and AI. We all know that if you have a very homogeneous group of people training algorithms, the results are less than desirable. And there's a great startup in Amsterdam as well. You're familiar with them as well, who are using blockchain technology and token economics to create a completely heterogeneous, geographically distributed group of, let's say, algorithm trainers. And at the same time, those trained algorithms are then sold using a similar platform again. And those people who are verifying data sets and kind of training the algorithms get rewarded for that. I think that's a really cool and very practical example of how do you say it? Making markets more inclusive and accessible to people. Yeah.
And as a conclusion remark, I would say, you know, there is this famous statement, this time it's different. and it relates to like there were many initiatives in the past which were trying to change the system, sort of, you know, because banks have been around since 500 years, I think, and but it has never been different, in fact, because we might not be able to improve banks in order to create a better world, but I would love to see that this time it will be for sure different, so that this time we'll be able to create a better monetary systems for many countries by using cryptocurrencies, for instance, or blockchain-based platforms.
Yeah. And of course, I think we can all agree that change is scary for most of the people. But that it's very necessary to do things absolutely different to kind of make some progress. At the same time, we cannot change the world at once, but we do need to give these models a chance, even if it's on a very small scale, trying out these models and how we can, let's say, exchange value in a different way. And what I would like everyone to kind of take away from this chat is that it's very easy to blindly stare at cryptocurrency and that it's supposed to be a different kind of money, but I think that's limiting the possibilities of what we can do with this capability of tokenization tremendously, and it might actually limit in what we can do in the next few years. So I hope everyone can broaden up that scope and think about value in a much more inclusive way. So I think our time is up. I see a big counter in front of me. I don't know if there's someone from the organization coming to kick us away. If not, then we can always do some questions from the audience until we are forced to leave.
Yeah. Maybe let's take one short question.
If there is any.
If there's any.
None? Okay, well then we did a good job.
Feel free to approach us.
Okay.
We will be staying here all the day.
All right.
Oh, there is a question. Yeah. Okay, I'll keep it short. Okay. So the question was, I said that Uber is not sharing economy, but rather aggregated economy. And if I could elaborate on it, so yeah, of course I can. My point was that with Uber charging a commission of 25%, 30%, whatever, it's, and also like, okay, other way around. So with them charging these commissions, with blockchain, we can create a true peer-to-peer platform, so sort of sharing economy. Because with blockchain, we can only charge what blockchain needs, so what the platform needs, only the operational maintenance costs, which can be like 0.5%. Because there will be no central authority deciding upon the percentage. Because Uber, I know like quite a few cities where Uber increased from 25% to 30%. All of a sudden, you know, because they like the idea of earning more. And also for us, like the microfinancing platform, it exists. And we are facilitating microloans for like 60 people so far. We are ready to scale up. We aim for completely decentralized governance, because we don't want anyone to have a power over the interest rates we'll be charging the borrowers.
All right.
Not even 100 days.
Maybe you guys can also just grab a coffee after this session, because I think we really have to move on. In short, I think it really is about, you know, letting go that we need to, I'd say, bundle or, you know, get economies of scale for everything before we can sell it onwards, but it can actually happen one-to-one. I'm going to leave you guys with that, so we can continue on with the program. Thank you for your time, and we'll see you around.